Most first-time homebuyers save for the minimum down payment, which is what they think is required to buy a house. But they are not even aware that they would be asked to bring more cash on the table before they close the house. These costs are referred to as closing costs. To buy a house in the province of Ontario, apart from the minimum down payment, you would also be asked to bring more cash to put towards the closing costs. These closing costs are typically 1 to 4% of the purchase price of the house. I know, now you're probably saying,
That's a lot. What are these closing costs?
let me break them down for you. The first is legal fees. This is the fee that you would pay to the lawyer for their services. Typically, a real estate lawyer will charge you around $1,000 depending upon the transaction. Next is land transfer tax. The marginal rate for a land transfer tax is a percentage of the purchase price of the house. Now, there are many calculators online that can help you calculate how much money you would pay as a land transfer tax. Also, there are some cities like the city of Toronto which will require you to pay a municipal land transfer tax in addition to the provincial land transfer tax. As a first-time homebuyer, you might be eligible to get a rebate if you qualify for the credit. Title insurance. Now, the word title is a legal term which means that you have the ownership of the property. You obtain title to the property when the seller signs over a deed, or in simple words, a transfer document over to you. A title is then registered in the government's land registration system. Title insurance is an insurance policy that protects the homeowner and the lender against the losses related to the title and ownership of the property. Now, another thing that could be added to your closing cost is the tax on the mortgage insurance. If you are putting less than 20% down on a property, the lender is going to require you to buy a mortgage insurance. Now, the mortgage insurance premium can be added to the actual mortgage itself. However, you will be required to pay the tax on the mortgage insurance upfront, and that is going to be a part of your closing costs. Home insurance. Now, this insurance is going to cover the cost of replacing your house and its contents. Although this is not a part of the closing cost that your lawyer will put on the statement that they will send to you, but it's something that you would be required to have in place before the closing of the house. Prepaid utility bill and property taxes. Now, in some cases, it is possible that the previous owner has a negative balance on the utility bills and or they have already paid the property taxes in advance for the whole year. So now you owe them that money. Now, your lawyer will add it on the statement of adjustment as a credit to the seller from your side. A few more costs that you should keep in mind would be the cost to home inspection should you choose to have one. You might have to pay for the appraisal. Typically, a lender will take that cost on themselves, but in some cases it can be transferred over to you. And also the moving expenses. So make sure you have accounted for the moving expenses towards the closing cost of your house. Now, when you are in the market to buy a house, be sure to discuss these costs with your realtor and make sure you have enough money in your bank account to cover all these costs. If you don't have enough money in your bank account as yet, we can still work with you to make a plan to help you get there. Now, I hope you got some value out of this video. If so, please hit the like button to help the YouTube algorithm, and be sure to subscribe to the channel so you don't miss another video. As always, if you have any questions, feel free to leave them in the comment box below, or you can book a call with me by clicking the first link in the description. I'll see you all in the next video.